Today, a spotlight on Palmwoods. Hello again, it's Martin North from Digital Finance Analytics. Welcome to the latest post covering finance and property news with a distinctively Australian flavour. Well, I have received hundreds and hundreds of requests for information relating to Queensland and particularly the Gold Coast and the Sunshine Coast. So I thought I would today start something of a series looking in on these areas. Now, there's a couple of interesting reasons why people are asking. Firstly, we know that there is quite a lot of interstate activity, particularly from Victoria and New South Wales, of people looking at Queensland, particularly down towards the Sunshine and Gold Coasts. We also know that the real estate sector are spruiking the Gold Coast and the Sunshine Coast as places where prices are booming. And thirdly, there is also the claim that there are huge transaction volumes in play at the moment. So, as well as talking about specific areas, this will also allow us to talk more broadly about what is actually going on in Queensland. Now, I must just add, of course, that this is not financial advice. This is just my own analysis based on as many different sources as I could find and my own core market model. If you want to get specific financial advice, you need to talk to a financial advisor. And just to recap, this is of course using that core market model where we suck in information from our surveys, from as many other sources as we can, for example from Job Seeker and Job Keeper datasets, a lot of real estate information, and as many other sources as we can get our hands on. And that information goes into our model and allows us to create a sense of what is really going on the ground. And as a result of that, we can take the stress data, the price trajectory history data, the buying and selling intentions, the migration statistics, and the economic information like CPI, wages and employment, and put all that through the model. And then we run it through our various scenarios. And we can form a view as to what may be happening down at postcode level. And it's really important to get granular because frankly, even talking about the Gold Coast or the Sunshine Coast is actually putting together so many different postcodes with so many different characteristics that it becomes relatively meaningless. So you need to go granular. And today I'm going to look at Palmwoods as an example of that. Now, you might well ask, where on earth is Palmwoods? Well, Palmwoods, postcode 4555, is inland from Maroochydore and the Port Cartwright Light. It's quite close to the Big Pineapple, you can see marked on the map there. And it's a reasonably large area which includes some rural areas and also some smaller settlements and quite a lot of development going on too, as we'll see as we get into it. Now here is a slightly larger scale map which shows that the centre of the location, Palmwoods, has a small number of roads in and out and a small number of streets. There is, however, a station which is perhaps quite attractive if you want to get further afield. And here are just a few local views of the area. This is in the main street with some of the local shops and even the station that I mentioned before. Now I'm going to focus predominantly on houses in the postcode because all but 13% of properties in this area are indeed houses. And the data shows that currently there are around 45 properties for sale in Palmwoods. Now here is a map showing the distribution of those for sale, and it's worth highlighting that there is some significant clusters where subdivisions are currently occurring. And here are a few examples of properties on the market as I'm looking today. There are some rural places, there are some villas, particularly on Lotus Chute Road, that's the one I showed you a picture of just now. And you can see that quite often it says offers over. Also quite a few subdivisions, as in Stapleton Court, prices from, another lot there. You can see that there's a significant amount of subdivision and development going on, as well as some older properties in the area. And this is quite an interesting one, where it's either the same property or it's a model of the same type of property in multiple locations. I'm not sure. And I would highlight again the offers over, the guide price. This is a suggestion perhaps that the market is not quite so hot as some agents would want to claim it is. Now, in terms of sold properties, there are 17 properties sold in the last 8 weeks in the postcode. And again, you can see the map liberally sprinkled throughout the location. And once again, it's the old trick, last asking price or even last asking price range tells you nothing about the settlement price. I'd also make the point that property here is relatively inexpensive compared with down south. And this last asking price thing is becoming more and more relevant because it is harder and harder to get decent settlement data. And many of the portals only report the last asking price, particularly, of course, if settlement prices are lower. And you can see that the bulk of the properties are rather rural or house. Some of them are on quite spacious lots, but there are also a number of properties on new subdivisions. Now, let's try and boil back the trends. This is the house price trend from 2013 to 2020. In 2013, the average price for a house was $435,000. When I say average, this is the median. $435,000. Today, it's $570,000. And you can see there that there has been a reasonable growth in price, 5.7, 2.2, 4.3, 6.1, 7.7, up to 2018. And then there was a fall down 1.8% in 2019 and a small recovery in 2020. And the average gain between 2013 and 2020 is 3.9% per annum, or after inflation, just 2%. And this is another example of disproving the old adage that property values double every 7 years. Certainly not in Palmwoods. Now, if we stand back and look at the summary for the total postcode, there are around 140 listings with 35 added in the past month, and that's a similar level of listings compared with last year. Around 13% of units, the rest are houses. The gross yields from an investment perspective are around 4.3%. That's a fall from 4.6% last year. The net yield is around 2.75% and falling. And the rents for houses are falling down 3% in the past month, although still 5% higher than the last year, with a typical rent of around $560 per week. Now, there are almost no vacancies there at the moment, so the vacancy rate is close to zero, compared with 2.3% in mid-May 2019. In fact, no vacancies are reported currently, compared with 14 back in 2019. And asking prices are on average up 2% over the past year, with a typical house price of around $610,000, but the average settlement price is coming in at around 5% lower than the asking price. That's important to understand where the market is, and the intention to sell is rising just slightly. Now, if we look at our stress data from our core market model, so in terms of households, there are around 2,600 households in the area, of which 1,300 are borrowing, 780 are renting. There are around 600 rental properties available, and there are around 700 property investors in the area. The overall financial stress measure is 22%, which is quite a lot lower relative to many other parts of the country. In terms of mild mortgage stress, 504 are there. That means that they've got cash flow issues with their mortgage. They may or may not have interest and principal repayment holidays. That equates to 38% of those borrowing. 38% is slightly under the national average at the moment. And the default rate risk is around 3%, which is slightly higher than the national average. There isn't much evidence of rental stress at the moment, and that is explained partly by interstate visitors coming and staying and being able to afford the relatively modest rents locally. And the investor stress is also quite low at around 10%. So this is very much a story of mortgage stress, and our analysis suggests that ahead, some of those who are in mortgage stress may well be in the situation where they are likely to sell. Now, we can look at the price scenarios for the area, and these scenarios, of course, are based on our overall modelling, which is very much around what happens with regard to the virus and the broader economy. In our best case scenario, the virus gets under control quickly, the borders get open, and the economy bounces back quite fast. And in that scenario, there is a view that prices could rise by, let's say, 5% over the next year, slightly more in 2022, and then come back slightly in 2023. That's not my central scenario, though. On the other hand, if the virus reasserts itself and we continue to lock down and the international borders remain closed, then we could see falls of around 4 to 5% over the next year, another 4 to 5% the following year, and over 3 years, a total fall of around 16%. But my mid case, and this is the one that I base my scenarios on, my mid case is a small fall over the next year, down 1.2%, another small fall in 2022, down 3.7%, and another fall in 2023, so that it will be 7% overall over 3 years. Now what we can then do is to apply that to the prices. And as I said before, the average price is $570,000 at the moment. So my modelling suggests a fall of 1.2% in 2021, which would take prices back to $563,000. Another 2.5% fall in 2022 at $549,000. And another small fall at 3.4% to take it back to $531,000 in 2023. That's my mid case, and I guess if you have a more positive view of the economy, then the falls will be lower. And it's worth reflecting that if this is true, this will take property values back to where they were in 2017, 2018. So in summary, what we can say is that there is some underlying demand for property in this area. Now, it's quite interesting understanding where that demand is coming from. Firstly, we know that there are a number of interstate purchasers looking to buy up in Queensland. Frankly, the prices are better, the weather's better, and the virus situation's better. In addition, we know that there are a lot of subdivisions going on in this area. And in fact, there are quite a lot of new properties being built in the area on subdivisions, and we know that there are more subdivisions coming. So the supply side is quite generous at the moment. And it's interesting that some of the older properties are more popular because of the larger land area. But purchasers are also competing directly with builders who are looking to subdivide, and the planning regulations are pretty generous at the moment. So the average lot size for new subdivisions is falling quite fast. So this is an area with a considerable amount of development, and I think that we're going to see more properties being built over the time ahead. Some demand will support prices, but nevertheless there is very little upside potential in terms of future capital value at the moment, and I think it's more a question of how long prices go sideways or down rather than rise. And I guess that's good news if you're looking to purchase, because it means you've got plenty of time to be picky and to get to know the area really well. If, on the other hand, you are selling, or indeed you are thinking that you might need to sell because of mortgage stress, then there's probably an argument for selling sooner rather than later, because my modelling is suggesting that there will be more properties on the market after Christmas and New Year, and supply demand suggests that prices will fall further as a result of that. So that's as far as I'm going to take the discussion today for Palmwoods, but it's an interesting case study of what's going on across the Sunshine Coast. Certainly there is really very little evidence here of a property boom, more a slow grind sideways with the occasional drift up. And I think you will see as I go through other postcodes later, this is pretty consistent with other parts of the Sunshine Coast and the Gold Coast. And putting the spruikers to bed for a second, this is more likely to be an area where prices are going to grind sideways, maybe slightly higher, but not boom. And that's despite quite considerable interstate demand. And if you look back over the longer term trends in Queensland, in fact, property values really have not moved up anything like many other parts of the country. And frankly, I don't think that's going to change anytime soon. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.